Welcome to the Prajna series by Nasan Palasmudram. Our speaker, Shri Rajesh V. George, Assistant Director at Nasan Palasmudram, brings with him deep expertise in GST administration and enforcement, including a valuable tenure at the Directorate of Revenue Intelligence. In this first part of his lecture series, he will lay the foundation by presenting an overview of GST returns and explaining the different types of returns under the GST regime.
Good afternoon. My name is Rajesh George, AD here at Nasan Palasmudram. Today, I will be talking to you about the returns in GST, or more specifically, we focus on the returns of a normal taxpayer. We also try to understand the flow of data in the returns of a normal taxpayer. The fact that, we have always heard that GST is a destination-based consumption tax. Now, when we say GST is a destination-based consumption tax, it means that the states that consume the supply of goods and or services should get the SGST component to that particular, it should accrue to that particular state. If I were to tell you that, I am a supplier of 100 numbers of this pen from the state of Karnataka, and if I am supplying it to my friend Chandrakant, who is actually situated, say, in Delhi, and those pens that are supplied by me from Karnataka into Delhi, if it is consumed in the state of Delhi, now the SGST portion of the tax that I have paid in the state of Karnataka should accrue to the state of Delhi. That is what we mean by a destination-based consumption tax. Having a destination-based consumption tax is what? Wonderful, superb. Now, I'm not going to get into as to what was earlier, but what is essential in a destination-based consumption tax is the fact that how do you ensure that the consuming states get the benefit of the taxes paid? Having a concept of destination-based consumption tax is beautiful. But you need to ensure that the consuming state in this particular example of Delhi should actually get the benefit of the taxes paid. Now, there are many mechanisms in the GST law. The first mechanisms to ensure that the consuming states get the benefit of the taxes paid, I would say the first mechanism is the GSTN that is provided to a particular taxpayer. A GSTN that is provided to a particular taxpayer, now what happens is that the GSTN is a 15-digit alphanumeric number that is there. It starts with the state code. The supplier and the recipient in any particular supply has a particular GSTN if they are registered persons, and if it is to an unregistered person, the recipient is identified by what is the state code. In fact, the state code forms the first two digits of the GSTN, the 15-digit GSTN. The second mechanism that is in place is the concept of, intrastate supply and interstate supply. So if you have the location of the supplier and the place of supply in the same state, it is an intrastate supply. If the location of the supplier and the place of supply are in different states or different union territories, it becomes an interstate supply. So now look at this perspective. If I have the GSTN of the supplier, which shows the first two digits as a state code, that means I have the location of the supplier pertaining to a particular state. Now, if I'm able to identify, or if I give a locale or a place where the place of supply is also captured, what happens is now the system knows whether it's an intrastate supply or an interstate supply, and accordingly the system knows to which particular state, which particular consuming state the benefit of the SGST portion should accrue. Now, this particular place where you can furnish details of the supplier and the recipient with reference to a registered person, the GSTN of the recipient, the unregistered person, the state code of the unregistered recipient, it happens through the process of returns. So, returns plays a very important role in the fact that you need to have settlement of funds between the various states, between the various consuming states. Now, with this background, I just want to head into this concept or this particular aspect that I've been talking to you about is that we focus on the returns of a normal taxpayer. Now, pause for a moment. I'm sure that all of us filed our income tax returns for the last income tax returns that we have filed. If I were to ask you which return form did you use to file your income tax returns, most of you, I think, I'm sure, because we are individuals in government organizations, we would have either filed an ITR1 or an ITR2. Now, what was the criteria which determined whether we filed an ITR1 or an ITR2? The criteria is very simple. It's the type of income that we earned during that particular financial year determines the type of returns or the return form that we need to file. So if I have an income from salary, I will generally be filing an ITR 1. Now, in the next financial year, if it so happens that if I have income from salary along with an income from capital gains, I will end up filing an ITR 2. That is, the same taxpayer, that is the same individual, depending on the type of income, files the type of returns, or the return form varies despite the fact that I am the same taxpayer, the same individual taxpayer. Now, keeping this aspect in mind, if I were to ask, or if I were to just ask you to just pause for a moment and think, what is the criteria that determines which return form needs to be filed in GST? Many of you may tell me many reasons. One of the reasons could be the turnover of the taxpayer, or you may tell me that it could be the type of supply that the taxpayer does. There are many reasons. Maybe you also will tell me the correct reason. The correct reason, or the type of returns that a taxpayer chooses which return form to file, depends on the type of taxpayer that he is registered at the time when he applies for a registration. What I'm trying to tell you is, in fact, if you were to go, I told you that GST registration is a totally online process. In fact, at the time of applying for a GST registration, the first question that is asked is the type of taxpayer that you want to register yourself as. So the first part, we begin with that particular concept as to what are the different types of taxpayers that are possible in GST. Now, if I were to ask you the different types of taxpayers that are there in GST, you will tell me different types of taxpayer. It could be a normal taxpayer, a person who is registered for the purpose of composition levy. It could be for the purpose of input service distributor, a tax deductor at source, and various such as one. But let me give you a small acronym, because I have always believed that if you have an acronym that is there in your minds, it helps us remember things a little more easier. So I'm just going to start with the different types of taxpayers that are possible, and I'm just going to give you a very small acronym that is there, which I'm going to say NC, no ITC. No ITC, and I add a U here. Okay, this is the different types of, I'm just trying to give you an acronym for you to remember the different types of taxpayers that can be registered in GST. Now, N stands for a normal taxpayer. C stands for a taxpayer who is registered for the purpose of composition levy. N is a non-resident taxable person. A non-resident taxable person has a temporary registration for a period of 90 days. He is based outside India. He comes into India for the purpose of an exhibition or a fair or whatever it is. He takes his registration for a maximum period of 90 days, or depending on the period that he wants, which could be lesser than 90 days. It is possible to extend those 90 days by another 90 days. Now, O stands for an online services, that is a non-resident online service provider, or a non-resident online money gaming services. If there is a person who is doing that, somebody who is outside India, typical example that comes to your mind could be a Netflix or an Amazon. If they are based outside India, rendering a service to a non-taxable person in India, covered under OIDAR or whatever it is, he registers himself under this online service provider, a non-resident online service provider. Now, you have I standing for an input service distributor, you have T for a tax deductor at source, and then you have C for tax collector at source, and then you have U for a UN body or diplomatic missions or other notified persons. Now, keeping these different taxpayers in mind, I'm just telling you, just giving you an introduction into the various return forms that are there in GST. Now, I told you that the return forms depends on the type of taxpayer that you register yourself, and the type of taxpayers are a normal taxpayer, a composition levy taxpayer, a non-resident taxable person. You have OIDAR service provider, or an online non-resident online service provider, or a non-resident online money gaming service provider. You have an input service distributor, you have a tax deductor at source, you have a tax collector at source, you have these UN bodies, diplomatic missions, which are actually registered for claiming a refund of the tax that is paid in respect to the supplies that they have received. Now, let's start with the various returns that these respective taxpayers need to file. I will come back to this normal taxpayer later, because today's session is all about the returns of a normal taxpayer. A composition levy taxpayer files what is called as a GSTR4. A GSTR4 is a return that is filed once in a year. In addition to that, every quarter, a composition levy person is required to file what is called as a CMP08. A non-resident taxable person files a GSTR5. A OIDAR person actually files a GSTR5A. An ISD person files a GSTR6. A TDS person files a GSTR7. TCS person files a GSTR8. And you have these UN bodies who actually file a GSTR11. Today's session is not about the returns of a composition levy person or an input service distributor or whatever it is, but the study material that has already been provided to you has a particular one single slide which covers what are the different returns with different types of taxpayers that are there, the different the returns that they need to file, that is from composition levy till the UN bodies. You have those details out there. Now, is there a periodicity involved with these returns? Is there a due date for these returns? Is there a late fee for these returns? The study material that has been provided for you has a particular slide which takes care of that. Today's focus, as far as I am concerned, is the returns or the various statements that are there in respect of a normal taxpayer. So now that we have answered the various returns that are filed by various of these taxpayers, let us look at what are the returns that are actually filed by a normal taxpayer. Now, a normal taxpayer, the first return or a statement that a normal taxpayer files is what is called as a GSTR1, or it is also you have an option which is called as an invoice furnishing facility, which is an IFF. A GSTR1 is nothing but the details of all the outward supplies made by the normal taxpayer during a particular tax period. That is what a GSTR1 is there. Now, the GSTR1 auto-populates the inward supplies of the recipients in the form which is called as GSTR2A. It is in the form GSTR2A. That is the details of inward supplies based on the outward supplies made by a particular supplier. The inward supplies of the recipient is auto-populated in the form GSTR2A. Now, it is auto-populated in the form GSTR2A. The details of the input tax credit auto-populates in the form GSTR2B. GSTR2A and 2B, you will have to remember, is actually pertaining to the inward supplies received by a recipient based on the outward supplies made by a supplier. Now, the GSTR1, the GSTR2A and the GSTR2B actually auto-populates the GSTR3B. GSTR1, 2A, 2B and the 3B auto-populates the GSTR9, and in addition to that there is the reconciliation statement in the GSTR9C where some details auto-populate from the GSTR9. Whenever a normal taxpayer actually cancels his registration or his registration is cancelled suo motu by the department, now the taxpayer or the normal taxpayer needs to file a final return in the form which is called as GSTR10. He files a GSTR10. Now you'll have to visualize 1.28 crore taxpayer have to comply with all these particular details of the returns and the statements that are in place month on month or maximum every quarter. Now this is what the GSTR, the various normal taxpayers are required to do. Now imagine this itself, I would say that is a huge compliance measure that is in place. Now in addition to this, there is what is called as a GSTR1A that is introduced from August 2024. There is a GSTR1A in case a taxpayer finds that he has made a mistake in his GSTR1 of a particular tax period. He finds a mistake in the GSTR1 of April 2025. Now after he files his GSTR1 for April 2025, the due date for April 2025 is 11th of May 2025. After he files it on 11th of May, say he files it on 11th of May 2025, he notices that he has made some mistakes in some particular table of his GSTR1 or various tables in his GSTR1. Now, the due date for April 2025 GSTR 3B is either 20th or 22nd of May. Now, before he files his GSTR 3B of April, that is before 20th of May or 22nd of May, depending on whether he is a monthly filer or a quarterly filer, the normal taxpayer has an option to correct or amend his GSTR1 in the form which is called as GSTR1A. And if you feel that this itself is a huge compliance measure, the last part is from October 2024, there is what is called as an invoice management system that is put in place. Now, there is an invoice management system. I will be talking to you about the invoice management system. But again, you need to remember this is in place only from October 2024. The GSTR 1A is only from August 2024. Prior to that, we had only the GSTR 1 for some till I think about August 2020 or July 2020. We had the GSTR 2A and you had the GSTR 3B. From August 2020, I think you have both the 2A and the GSTR 2B, both are there. That is the details of inward supplies in GSTR 2A, the details of input tax credit in GSTR 2B, both are made available from August 2020. GSTR 3B was always there from July 2017. GSTR 9 and 9C were always there. GSTR 10 is also there. From August 2024, you have GSTR 1A and you have the invoice management system which is there from October 2024. Why do we focus on the returns of a normal taxpayer? Why is it essential that we need to understand the flow of data in the returns of a normal taxpayer? Let me give you a few reasons before we get into the session on returns of a normal taxpayer. The first reason is a pic that you see on your screen here. What you see here is the number of active registered taxpayers as on 30th of June 2024. That is 7 years after GST was implemented on the 1st of July 2017. The number of active registered taxpayers as of 30th of June 2024 is about 1.47 crore taxpayers. Out of this 1.47 crore active registered taxpayers, we have about 1.28 crores of taxpayers who are registered as a normal taxpayer. Now, which actually tells you that about 87% of your taxpayer base is registered as a normal taxpayer. About 15 lakh taxpayers are registered for the purpose of composition levy, and we have about 3 lakh taxpayers registered for the purpose of tax deduction at source. So what I'm trying to highlight is the fact that 87% of your taxpayer base is registered as a normal taxpayer. Now, this is a figure that I said is as on 30th of June 2024, but actually on 31st of March 2025, also the figure is more or less the same. This 1.47 crores of active registered taxpayers is now about 1.51 crores of active registered taxpayers. And the number of normal registered taxpayers is about 1.33 crores of taxpayers. So what effectively it means that 7 out of 8 taxpayers which are registered in GST is registered as a normal taxpayer. That is, 88% of your taxpayer base is registered as a normal taxpayer. Now, the GST revenue for 2023-24, the GST revenue for 2023-24 is roughly about 20 lakh crores. Out of this 20 lakh crores, if I were to ask you what was the revenue contributed by this 10% of your taxpayer base, which is registered as a composition levy person, you will be surprised to know that it is only about 4,000 crores. This data is very much available on the public domain. It is available on the gst.gov.in portal, where we just need to go to the downloads, and in the GST statistics, this particular information is available. So again, I'm trying to highlight the fact that 10% of your taxpayer base that is there is actually contributing about 4,000 crores out of the 20 lakh crores of GST revenue for 23-24. Now, which effectively means that the 88% of your taxpayer base, which is registered as a normal taxpayer, is actually contributing close to 99% of your GST revenue for 23-24. This is my first reason why we focus on the returns of a normal taxpayer. The second reason is the fact that one of the most important shifts that happened from central excise service tax VAT into the GST regime was that it was always envisaged that there would be 4 business processes which would be actually online. What do you mean by the business process? The business process of taking a registration in GST, filing a returns in GST, payment of taxes in GST, or filing a refund claim would be a process which would be online. That means if a person wants to register in GST, he has to do it online. After he gets his registration, if he wants to file his returns, he has to do it online. If he wants to pay the taxes, or if he wants to file his refund claim, it has to be online. Now, what happened is in fact, before GST came into effect from 1st of July 2017, various committees were formed to study these business processes and give their recommendations. Based on these recommendations, there are these committee reports on registration, returns, payments and refunds. Now, what I'm trying to highlight is the fact that, the process of returns, when it becomes online, we have to visualize that about 1.28 crore registered taxpayers who are registered as a normal taxpayer will be filing returns online. Actually, when 1.28 crore taxpayers file returns online, the biggest takeaway is that, we have so much of data that is there with reference to the compliance, with reference to these taxpayers. Now, the biggest challenge that, the central and the state GST departments felt was the abundance of data that was there. There was so much of data, we had to make business sense out of these particular data so that, you ensure a better compliance from these registered taxpayers. So what happened is the fact that, the central and the GST departments, what they did is the fact that, they came up with, trying to come up with various analytical tools that would facilitate, analysis of the vast amount of data that was being generated from these returns. In fact, the central GST actually came up with analytical tools like BIFA, Advait, e-way bill analytics, and so on. Now, I'm trying to give you a reason as to why we focus on the returns of a normal taxpayer and why is it essential that we need to understand the flow of data in the returns of a normal taxpayer. This is my focus. So I'm giving you the second reason. Now, these analytical tools, what happened at that particular point in time is, I want to speak about one of those analytical tools that was actually developed by the Karnataka State GST along with NIC. It is nothing to speak about the tool that is in place. I just want to highlight the fact that, why is it essential that we need to understand the flow of data. Now, this one of the earliest analytical reports that was being generated, was a mismatch between a GSTR1 and a GSTR3B. When we say a mismatch between a GSTR1 and a GSTR3B, it means that the details of outward supplies that a normal taxpayer shows in his GSTR1 results in a particular liability. Let us say it is IGST 1 lakh, CGST 50,000, SGST 50,000. Now, it is expected that this 1,50,000 and 50,000 needs to be paid when the taxpayer files his GSTR3B. If the taxpayer files the GSTR3B and pays IGST of 1 lakh, CGST of 50,000, SGST of 50,000, there is no mismatch that happens. But if it so happens at the time of filing his GSTR3B, due to certain reasons, there may be many reasons, I'm not going to go into the reasons at this moment, but I will come back to it later. Now, what happens is, if at the time of filing his GSTR3B, assume that he pays only IGST of 50,000, CGST of 25,000, SGST of 25,000, then what happens is, there is a mismatch between the GSTR1 and the GSTR3B. So this particular analytical tool that was developed by Karnataka State GST, one of the analytical reports that can be generated is, what you see here is, there is the total output GST declared in R3B is less than the R1 tax liability in the R1 statement. That is what it means. So effectively, it generates a report which shows a difference in excess of 10 lakhs. You can specify the limit beyond which you want to have it. This is only an extract that I've taken from one of the reports that is there in February 2024. But let me also tell you that this particular the error that I'm trying to highlight because of this data flow has been rectified subsequently in May 24. But it's just, I'm just trying to give you another reason as to why we focus on the returns of a normal taxpayer, or try to understand the flow of data in the returns of a normal taxpayer. Now, here what you see is the first entry that you see here is the fact that, there is Nike India Private Limited, which shows a difference of about 65 crores. That means the R1 liability declared was about 85.5 crores, whereas the R3B liability that was paid was effectively about 20 crores, showing that, there is a mismatch in the liability between the R1 and the R3B to the extent of 65 crores. Now, instinctively, when we get it on our dashboard, what do? We say, oh, 65 crores is a huge amount. We need to act upon it. We take so many action. We write to the taxpayer. We try to find out what is the reason why there is this difference of 65 crores. And instinctively, we say, taxpayer needs to pay the 65 crores. But what if I were to tell you that it is actually the system logic that was built into this analytical tool, which actually resulted in this difference of 65 crores. Actually, there is no difference of 65 crores, the difference is zero. Now, again, what I'm trying to highlight is the fact that, systems were also built wherein the flow of data was not very clear, resulting in incorrect analytical reports that were generated. So you have the second reason why we focus on the returns of a normal taxpayer, why it is essential that we need to understand the flow of data in the returns of a normal taxpayer. Now, the third reason is that, a session on returns that we do, whenever we do a session on returns, I have found that, we touch upon at least 25 to 30% of the working concepts, important working concepts that are there in GST. So it gives you an opportunity that when we do a session on returns, we at least touch upon these 25 to 30% of these working concepts that are there. We make ourselves more clearer with these concepts, and also it gives an indication as to where our awareness with reference to these concepts are.
In the upcoming videos of the Prajna series, Shri Rajesh V. George will take a deeper look into GST returns, including their structure, filing process, and the underlying data flow.